This show is sponsored by Den 10 Insurance Services, helping businesses get the right insurance for all their insurance needs. Visit den10.io to get a quote. DENTEN.io. And remember, when you buy an insurance policy from Den 10, you're giving back on a global scale. Hello, all my entrepreneurs and business leaders, and welcome to the Michael Esposito Show, where I interview titans of industry in order to inform, educate, and inspire you to be great. My guest today is a longtime SVP level insurance product manager. It's a big word, but we'll break it down for you. Turned startup co-founder. All her favorite career wins have been around unraveling the complexity of people and projects, chartering a course to success, and inspiring the whole team to reach that goal. Please welcome CEO of Surround Insurance, Kate Terry. Welcome.
Hi, Michael. It's great to be here. Thanks for the invitation.
Yeah, it's so cool. So cool to have you on, another insurance professional, SVP level insurance product manager.
Oh my!
Just like in banking, we have those fun names in those big organizations, right?
Yep. I certainly came out of the big organizational world, so yes.
Yeah, and you spoke a little bit about that in your bio that you sent over about having a great career. I think insurance is wonderful for that. And banking is very similar in that. Is that you can have a really great career and really be set. But as you start getting more letters added to your title, you also start disconnecting with the clients.
Yes.
And if you're in it for the clients and passionate about them, that becomes a little bit jarring.
Yes. No, you're so right. I mean, it's weird. Nobody goes to fifth grade career day and says, "Oh, I want to be in insurance when I grow up." Right? Weren't we all going to be sports stars and artists and teachers and things like that? Right?
I was gonna be in the NBA.
How'd you do on that?
I'm 5'9".
Play point guard, maybe. I don't know.
Oh,
right. But yeah. So I think that is the thing. I think the thing that excites me about insurance is that life is inherently unfair, and every day I come to work, I make life more fair, right? And I know that's not most people's kind of take on insurance, especially if you're on the consumer side. Nobody wakes up in the morning and says, "Oh my gosh, I'm so glad I have some insurance," right? But that's what we do, right? It is about the people that we serve. And I have to tell you the moment that I knew insurance was the right moment for me. So I worked at Progressive very early in my career. I was an intern between the 2 years of business school. And Progressive, like many other players in the industry, partially funds the Insurance Institute for Highway Safety. The organization does the crash tests. And they took us on a field trip because it wasn't very far from it's out in Virginia, not very far from the office I was working out of. And there's a museum in the Insurance Institute for Highway Safety. And what they've got is old cars. So a car they crashed, and then a car they crashed that was the same make and model a few years later. And so I remember seeing a Mitsubishi Lancer. Like, I can't remember. I don't even know if Mitsubishi has made Lancers in like 2 decades, right? But it was the first year that they had crashed the Mitsubishi Lancer. And it's this like side impact test, right? Where the car doesn't actually move. They've got this wall that they like ram into the car at 30 miles an hour or something. And the B pillar, which is the pillar between the driver and the passenger side, so big piece of like structural material, had gone in where it impaled the dummy. Like the end of it was like pointed shard of metal right in the middle of the driver's seat. Like zero chance anybody would have survived that. It was kind of horrific to look at, right? And these are not 75-mile-per-hour crashes they're doing, right? And then they had an example of a Mitsubishi Lancer that was like 3 or 4 years later, after they'd published the tests, and they did exactly the same test, and the entire passenger cabin was intact. So like somebody would have survived that. And it was just that moment where I was standing there looking at like where somebody would have been impaled, and then looking at the safety of, just a few years later. And I was kind of like, oh, this is where I want to be. There's all this data and all this technology, and it's taking those moments in life. They're so inherently unfair and distributed randomly. And it's getting rid of as many of them as we possibly can. And it's putting people back together in every way we can. And so, yes, that was where the crashed car museum changed the path of my life.
And also, I think, in terms of insurance and actuaries and that kind of data and work, it changes the course of so many people's lives. I mean, without having that data, which again, you mentioned it earlier, some people don't like insurance. We're going to touch about that in a second. But without that kind of information that leads to our rates and our rating and the way that we do it, then there's no changes that happen on the other end. If the insurance company rates that vehicle that is impaling people the same as they rate somebody else that's not, well, then nothing's going to change. And so what's wonderful about this story is that we could see that there was a change and that they said something has to be done about this. And we see that in our industry is that, claims happen and sometimes they don't get paid and people are really upset. And it really does suck when it doesn't happen. It does suck. But what it does do is it changes the way that the insurance company speaks to their clients and their prospects and lets them know, like, hey, you need to have these guardrails in place. And then you as the consumer learn, I need to have these guardrails in place. Yeah, right.
And I would never say that everything the insurance industry has ever done or that any individual has ever done is precisely right without mistake and all of that. That would be a silly comment to make. But I will say that the vast majority of people that I've known in the insurance industry, especially the people dealing with the customers on the front line, claims adjusters, sales and service reps, et cetera, they are absolutely trying to do the right thing for the customer in front of them every single time and to give them the benefit of the doubt whenever they can, right? So this is an imperfect human-built system that, I would never say is perfect, but we are far better off than we would be without it, because without it, we might all be thinking how cool Mitsubishi Lancers are, right? The 1977 model or whatever it was, driving them around. Yeah. Now I'm going to go Google later and see when they stopped making them, because I don't think I've seen one in years and years.
And I've heard another insurance professional, and this is what I love about our industry is we have a really great industry. I mean, we have some bad seeds. Every industry has bad seeds in them.
Of course.
But we have a really great industry that comes together and speaks to each other and helps each other and shares wisdom with each other. And I just heard somebody recently at a Lunch and Learn, another insurance agent professional who owns an agency, and he was talking about insurance premiums. And it was funny, the way he did it, I thought, I was like, as a public speaking coach, I was just like, that was great job doing it that way. Because he was like doing his whole spiel and then he stopped himself and he looked out into the audience and he said, you have insurance, right? And she goes, and she nods her head yes. And he goes, and how do you like it? And he said it with that tone, and you could see her head nod like, I hate it, right? And he goes, yeah, you do, right? And he goes, and how about when that premium comes in? And she goes, oh, no. And she's nodding her head. And he goes, oh, yeah. And he looks around and he goes, oh, yeah, she hates the premium. Of course she does. And he said, and here's the issue with that. And this is what I loved, was he said, see, most of us, we look at insurance premiums as a cost. We look at insurance premiums as something that we have to pay for and an expense. And he said, affluent people, they don't look at an insurance premium the same way. Affluent people look at it as a hedge against what is inevitably going to happen. Because we all know from these actuaries, from statistics, that anywhere between 5 to 7 years, a claim is going to happen, whether it's your fault or somebody else's. And if you don't have insurance, you're going to have to pay out of pocket, or if the other person's at fault and they don't have the money, you're still might have to pay somewhat out of pocket, right? So affluent people look at insurance and they say, this is a hedge against future outcomes, right? And I thought that was such a great perception, a great way to look at it.
Yeah, it is. Yeah, it's tough too, because I mean, none of us like to pay our insurance bills, right? We just
Nobody
got
wants
our
to pay any bills.
Insurance premium, and I was like, we've never had a claim. Why is it going up so much? I mean, I already know what the answer to that is, right? But as a consumer, I had a little bit of sticker shock. I was like, do they have a higher deductible? But the reality is, what is the alternative? Like, what is the alternative? That you own your car, and if it's if your car's worth $11,000 used, and you total it, you're out $11,000, and you need to buy a new car. What's the alternative? There isn't. Right.
Which actually has happened to me. I mean, before I got into insurance and didn't know much about insurance at all, and I was managing my own insurance through Geico, thanks to the Geico app. And I took off collision and comp and everything because I was like, "Ooh, I could save a ton of money by taking all of this off." I crashed into a tree, and it was actually, I had a Nissan. What year was that car? That was like a 2000 or something, Nissan Maxima, and I fell asleep at the wheel. on the Taconic State Parkway over here in New York. I fell asleep and I woke up and a tree was in my lap. And thankfully, I was alive and well and safe and
I'm glad to hear that,
unharmed.
because those accidents can be bad, right?
Yeah, I was, outside of, I had a knee injury that I guess now that I think about it, that's probably why my right knee still bothers me too. I'd never even put the two together until just a second. That's so wild.
Oh no, that wasn't a light bulb you needed to have.
Oh my
right?
goodness. Yeah, because my knee swelled up big time. But anyway, I was out a $10,000 vehicle, exactly the number.
Yeah.
And, that really was, it was my savings. It was my life savings at the time. I was in college. It was everything I had saved for, and it was gone. And there was nothing else I could do about it.
In an instant, right? Yeah, and you still have to get to your job or to school or wherever it is you're going. And unless you live in a major city with great public transportation, which most of us don't, best of luck. Yeah, this is why insurance fraud makes me so angry. We've all seen different estimates, but for car insurance, one estimate is something between 20 and 30% of the dollars spent to pay for losses covers insurance fraud. And there's a variety of kinds of fraud, right? There's everything from like organized rings committing, fake accidents, to people who are like, oh, my mechanic or the body shop is going to like give me my deductible back. They'll just increase the estimate a little bit, right? And I think it feels to people like a victimless crime, like, oh, we'll just get the big insurance company. But as you and I both know, the reality is that the way insurance is priced, it's on a cost plus basis, right? Like literally it is highly regulated, and insurance companies take all of their costs and they submit them to the regulators, and they're allowed a certain profit margin basically on top of those costs. So those costs include every fraudulent dollar. So every one of us is paying 20 to 30% more than we should because of the people who are gaming the system. And that makes me furious, because it's just one of those things, like people do it. It's not always possible to prove it. And it's basically costing all of the rest of us. We should be able to pay less for insurance for the same coverage.
Yeah. And, that touches on, and, for our listeners, most people who listen to this podcast and who are tuning in today are either entrepreneurs, starting a business, doing something of that nature. But because we're two insurance professionals here talking, I'm sure we might get some people who are interested in learning about insurance and learning about why insurance does cost what it costs. So I think it's a good time to maybe address that in that. In the state that we're in of being in a hard market, in that insurance rates have gone up. I'm interested on your insight on that and what we can share to our listeners as to why that's happening and how it's affecting them, and what the light at the end of the tunnel does look like, because there is a light at the end of the tunnel.
There is a light. Yeah, no, I mean, insurance is cyclical. I've been in the industry almost 20 years. This is the worst market I have ever seen for property and casualty insurance. The worst.
Aren't you happy we both started a company during this time?
Yeah, there's a few mistakes I've made in life, No, hey, companies that survive hard times come out stronger,
That's
right?
what I'm hoping for.
But also, don't start a company right before a pandemic. Best business advice ever. But yeah, so I mean, there's a few things going on, right? One, and they're all interrelated. One major issue is that driving patterns changed a lot during COVID, right? So during COVID, fewer people were on the road, but the people who were driving at much faster rates of speed. So I'm in the Boston area, which has terrible traffic, and I'm imagining what the Mass Pike looked like in an average commute in 2019 versus average commute in 2020. For sure, the traffic's moving a whole lot faster in 2020. What that meant is that accidents were much, much more severe. I'm not, my husband's actually a physicist. I am not, but what is it, like force equals mass times acceleration? And so when you increase speed, it like exponentially increases the force of an accident. So, if the traffic used to be going 15 miles an hour and now it's going 50 miles an hour, massive difference in damages, injuries, damages, et cetera. And the insurance companies didn't necessarily do a great job of picking that up in their data, because more complex accidents take longer to get like the right data on, right? If you just think about like how many medical appointments will there be, how long will it take to fix a car, right? And then you combine that with the parts shortage that was happening through and after COVID, so that it took longer to repair cars. Everything just got more expensive really, really rapidly, right? So I think that's one thing that we're still coming out of, because it takes a while to unravel that and reset prices. And insurance companies essentially are not allowed to run in a way that would leave them insolvent. So they can't just be like, oh, forget it. We'll just charge much lower prices and wait until costs come back in line. Like that's a thing other industries can do. It's not a thing insurance can do, generally speaking. I think the second issue is because of some of the changes in commuting patterns and because of the shortages in kind of cars being produced as a result of all of this mess, right? There were fewer car leases, right? Like fewer people in 2020 were like, I'm going to lease myself a new car. And so the biggest source of used cars, of course, is the end of cars coming off leases after 36 months or whatever. So there's a serious shortage of used cars, as anybody who's tried to sell or buy a used car is aware of. Prices have gone way up. It means that cars that could have been replaced when they were seriously damaged before, like what, there's just nothing there and everything's more expensive. So that's a second thing. Inflation is a mess and makes everything unpredictable in general. Not for auto insurance specifically, but for homeowners, the issues with climate change and wildfires and all of the rest of the tornadoes, the damages that are going on are getting more severe and more unpredictable. And then also there is an issue in some states with regulation where regulators are not adapting to the fact that the number and severity of storms or fires or whatever has increased dramatically. And if insurance companies can't make an adequate return, they will simply leave the state. And so I know we've seen that in some of the larger states, where there's more catastrophe exposure. And so all of these together both make things more expensive. And also they just make things so confusing and complicated that it's really hard to figure out, what needs to be. So a lot of insurance companies are increasing their pricing. As any of us who buy insurance know, my homeowners went up by almost 30%. We don't live in a particularly cat exposed area. And we've never had a claim, and that just is what it is. But inflation is coming down, manufacturing capacity is coming back online and is shifting and is onshoring in some cases. I do think we'll see stability moving into 2024, but probably not until then.
Yeah, and to your point about insurance companies leaving states or leaving areas, I mean that's part of with their rates go up. It's funny, it's not funny, but I guess it's understanding when we have a client call and they go, what are they thinking? My insurance went up 30%. What is that company thinking? And you and I both know what they're thinking. They're thinking we don't want to insure in that area anymore.
Yeah.
and so and so the best way for them to leave is to just raise the rates and you'll leave.
And you'll leave. Exactly. And in most cases, those rate increases, I hate to say this, are less than they should be based on what's going on in your neighborhood, because in general, insurance companies sort of tamp down some of the extremes that they're seeing in their data until they're sure that it's what's happening, right? But I mean, like it's not cost effective to continue to rebuild homes that are right on the coast where hurricanes come by all the time, or homes that are in wildfire exposed areas that really can't be protected well, right?
And for a little transparency too for our listeners is that, and we on the agent side, we also experience something similar in that we don't get rewarded for writing business in places that they don't want to sell business. So if a carrier doesn't want to write in a certain place and we're writing there, the commissions are lower. And in fact, there are carriers that I won't name that have reduced their commissions to such a point that it actually doesn't make sense to sell their product, and it's because it costs us money to sell their product, and they've made that very clear, and it's because they're trying to avoid going insolvent.
Yeah. I mean, we did an expansion from 12 states. We were licensed in 12 states, mostly in the Northeast or on the East Coast. And we expanded to 30 states in late 2022 into early 2023. And there are states where we cannot get a carrier to appoint us, despite the fact that our loss performance with our prior carriers has been really excellent and that we're growing quickly. They're just like, we are not appointing new agents in these states, like not for anything. And so it means we don't even have a product to sell. Right. So it is a more complicated market than just insurance companies should sell less. I mean, insurance companies, the number one responsibility is to remain solvent so they can pay claims to their existing policyholders. And that is also the number one job of regulators, right? It's not to make sure your insurance company talks to you nicely. It's to make sure that that company will be there to pay the claims that they are committed to paying if something happens, right? But then the second thing is to make sure there's market availability, right? Which is an issue. And then the third thing is to make sure that companies are treating customers correctly according to the law and regulations. And those are three very serious responsibilities of companies and of regulators, right? And right now, availability is really problematic.
Yeah, and could you break down the solvency piece into maybe some layman's terms for our listeners in that? The kind of like the pool of money, helping our listeners understand the pool of money that's there in order to pay claims.
Yeah. So every kind of insurance is a little bit different in terms of what you need. But if you think about it, homeowners, right? So my homeowners company has a whole bunch of homes that they insure. They collect the premium year after year. They have to, based on how many homes they've insured and how much those are worth and how much coverage is on them, they have to hold a certain amount of cash so that they can pay the claims that they expect to see based on sort of some statistical modeling in the past. So what happens is if there are very severe weather events that are, I'm just using that as an example, but very severe weather events that are atypical of an area and are enormously expensive, like Hurricane Sandy, right, coming through New York and New Jersey a few years back, or the Canadian wildfires right now, or anything like that that's going on, all of a sudden they need to draw on that pool of cash and it gets smaller. Now, the vast majority of insurance companies have plenty of money to pay these claims. But because there's sort of by law ratios of the amount they need to keep in that pool of money, what that does mean is that they can't write new business because they can't take more risk on until they find more cash, right? And so that's what's actually happening in some of these states like California and Florida, right? It's not necessarily that the companies can't pay their claims, although that is sometimes an issue. It's that they can't take on new clients because their pool of money is diminished. And a piece of that reason is paying out all these claims, but all the instability with interest rates and what's going on in the stock market and all that doesn't make it any easier to manage that money. I mean, insurance companies are basically gigantic pools of money that are managed very, very intensely and in a conservative way in order to pay claims, right? There's like two pieces of every insurance company, the investment operations and then the actual insurance operations. I think it's easy if you're not in the industry to not even really think about how much investment there is, but insurance companies are holding like billions of dollars to pay future claims.
Right. And a lot of them are publicly traded. And so that all of that has a big effect like you're talking about. So
yeah. And I mean, the ones that are public in particular, where do they raise money from? Well, they raise it from the public markets, right? And if the public markets are not hospitable to insurance companies raising more money, the only other source is sort of private debt, that sort of thing, right? And and private debt has just gotten incredibly expensive with interest rates and whatever. So it's a little bit of an interlinking between kind of the general economic picture and the actual insurance operations as well.
So what's cool about this conversation that we're having right now is it kind of links back to you and your history, because we're kind of like at this high level talking about insurance as an industry from a 30,000 foot view from what people in our industry are speaking about. And we're trying to distill that for our listeners here who are, starting businesses and maybe needing business insurance or cyber insurance or have a home or an auto and are trying to understand why is my premium so high. And I hope that we were able to kind of help you understand and unravel some of that. And I'm sure we'll get into more detail into some of that into the podcast. But what's interesting about this for me in this conversation with you is that's that high level. And then again, the reason why you started your own business, and I really want to understand the why behind it, because that's really what this is all about, is because you wanted to reconnect with the community that you serve and the clients in that community. And so this is kind of like what we're doing. It's kind of like, let's give it back to them and let them know what's going on in our industry. But back to you now in terms of, so you were in a high level. You held a really great position. You said you could have been there for years or even gone to another company and been there for years. But you had this desire to start your own firm.
I did.
And what's also interesting about this that I want you to just jump on and run with is that, and it was spawned by a client. I love that.
There was a little step in between.
Okay, go ahead.
but yeah, it was. So I could make this sound like it was a really planned trajectory, but that's like just not true. So let me tell you what really happened. So yeah, I was senior vice president at Liberty Mutual, Fortune 100 company, really good company, takes care of its clients, takes care of its employees. And I was spending all of my time sitting in steering committee meetings, and I don't know, but no steering committee that I've ever met has an engine of any sort, right? It's a lot of sitting around and pontificating, which is what one does at that level. And there were 7 levels between me and some of the frontline people on my team. I had a team of several hundred people, and they had a whole bunch of different functions across 7 or 8 different offices. And one day I was just like, my soul is turning into desiccated powder here. Like, I can't do this. There is nothing I can do. I can't spend the next 15 years or 20 years or 30 years doing this. I don't want my boss's job. I don't want my boss's job. I am so far from what inspired me to be in the insurance space. So I up and quit, which to the utter shock of the people around me were like, wait, what? Because who does that, right? And I actually quit without a job. And I went back to school for a bit in an unrelated field, in part because it was sort of intellectually interesting. And I had former colleagues I'd worked at 3 different insurance companies by that point. I had former colleagues calling me asking if I might do a little consulting work for them. So paid the bills, was easy, was interesting. Kind of scratched the itch for professional productivity. And then one day, one of my clients, Jay Grayson, turned to me. I'd been working with him for about 2 months, and kind of sketching out how to build an insurance product for him, because he had this idea of building insurance for young adults. And I was kind of the product expert. And he turned to me and he said, "Have you ever thought about becoming an insurtech entrepreneur?" And I said, "No." And he said, "No, I meant, did you want to start this company with me?" I was like, oh, that's a different question. And so I said, "Well, I'm not sure." The reason I gave him, and he'll laugh about this now, but the reason I gave him was because we initially built our own product, and I was not sure that the regulators would be hospitable to it. And I mean, many a small company has just died on the throes of how long it takes to get anything approved. So I said, let's go out and let's visit some insurance regulators and see what they say, and see if they're going to be kind of helpful and supportive and all of that. But the other ulterior motive, as I said to my husband later on that afternoon, was I scarcely know this guy, right? Like, people say you shouldn't start a company with somebody you don't know. I was like, so we're going on a road trip, and one of 2 things is going to happen. Either I'm going to come back and tell you I want to be an insurtech entrepreneur, or I'm going to call you from the side of the road in Peoria and tell you that he's throwing me out of the car. I can't get an Uber and I need some help. One of those 2. Those are, like, in my head, those were the only 2 binary options for the obvious outcomes of this trip, right? But it turns out that you can, in fact, drive across cornfields for many, many, many hours, because we did go to the Department of Insurance in Illinois, which is in Springfield, not in Chicago. And we actually really hit it off. Talked about insurance the entire time, this entire trip. We're welcomed by the regulators, who said, "We see the same problems you do, but it's not our job to build products, so we'll help you any way we can." And I came back and joined as a co-founder at Surround Insurance. And so here I am. So yeah, it was a combination of the opportunity sitting there, and being in a headspace where I was ready to do something different, as opposed to an intentional, what I'm going to do is leave here and start a company. There's nothing wrong with that approach, but I just think sometimes you need to get yourself into a headspace where you're open to possibility. Before things can happen, and as much as that's agonizing to do in practice.
Yeah, no, I mean, the opening, you got to have that open, clear mind in order for you to have the opportunities come up and you be able to take action on them, for sure. Yeah. What is, or what was the product that you guys were working on?
Yeah, so we built a combination of 3 products to start with. We set up as what's called the managing general agency. So we built the product, and did the marketing and underwriting, with a reinsurer behind us. So we built a non-owner auto personal lines product, which is driving insurance for people who don't own a car, kind of responding to the delay in the purchase of assets that younger people are sort of seeing, but yet they're still driving and exposed to risk. We built a simple renter's insurance product just to go with it, because almost everybody who needs non-owner auto also needs renters, and that's easy. And then a very light professional liability product intended for a side gig, so they could kind of be packaged together in any combination, bound and sold within about 2.5 minutes.
And so those products are up and running?
So they were up and running.
Oh, okay.
We had a big pivot earlier this year.
Okay.
So we've raised about $7 million to date. We closed on our seed round in October of 2022, and then did sort of a second close with a little bit more capital in March of 2023. But we started fundraising for our seed round, which was meant to allow us to expand our product from the states that we were in February of 2022, which might possibly have been the worst month ever to start to raise venture capital, with the possible exception of March 2020. The market still is horrendous for early stage capital, like absolutely horrendous. And Jay was still CEO at that point, and thank goodness he had the drive to keep going and keep going. But instead of fundraising being a 3 to 6 month affair, we didn't close until October. And so we needed a plan B long before that. So we built a little digital agency alongside our MGA. So we had our own products, but then so that we could expand faster to other states, and so that we could serve needs that our products didn't. We had a couple of carriers and a little digital agency. And then we were talking about how hard the market is right now. When we had got wind of what our reinsurance renewals were going to do, because we had reinsurance behind this product, it was going to be a significant increase despite our book performing very, very well. We kind of looked at each other and we're like, oh, this isn't going to work. The fixed costs are suddenly too high. So we pivoted in January of 2023 to become a digital agency serving the same population, smart younger adults whose lives are different from their parents because of technology, who are actually often overlooked by traditional agencies and traditional carriers. They don't know how to get to them. They think they're too low average written premium. They can't answer their more complex questions. We can do all of those things. So it was sort of painful. It was really painful to kind of throw away several years of work in some ways. But we have been growing at a very fast clip since then. So it was absolutely the right thing to do.
Yeah. So when you look at these products that you were creating and then pivoting from them, it's kind of like turning away from the original plan, and it's scary, right? So
it's terrifying. Yeah.
I'm interested in that time there for you guys, for those conversations, what those were like, and then how you were able to, we talked about clarity just a second ago, how you were able to find the clarity to make this pivot and make this change into where you are today.
Yeah. So we found out about our reinsurance renewal in, let's say, January of 2020. January of 2023. I'm losing years here. And Jay and I just sort of looked at each other and we're like, wow, this isn't going to work. And so the immediate sort of terror is, well, what do we do? Like, do we need to shut down, or do we have something to do? But we had this little digital agency, which was growing. We just weren't putting any effort into it, right? So we're like, okay, well, that works. But now we got to go to our brand new board, because remember, we just raised money, and say, so that thing that we said we were going to do, we're not going to do that thing. And so we looked at each other and we were sort of like, oh my gosh, we may both get fired. This may be the end of this, right? But it was very anxiety producing. But we went to the board and we explained to them what we were going to do and what the next steps were. And their response was, oh my goodness, thank gosh. Like we can't tell you the number of times that entrepreneurs wait too long to make the changes they know need to happen. And I think that is like a life lesson. It's not just entrepreneurs, it's a life lesson, right? And so, it wasn't, not everybody was like, wait, you're making changes? That's just amazing. But on the other hand, everybody kind of got it. And they're like, yeah, this makes total sense. Like, we need to be in a place where we can grow and where we can make money and where the fixed costs are not so high that they're prohibitive, basically.
So much of the challenge in what you just said there is having that hard conversation with a board. And so I think leading up to that, what was that like? What were obviously you had the conversations with Jay, but you also had conversations with board members, is my assumption, somewhat informal. What were some of the things that you were able to do to lead up to that moment where you had to pretty much present?
Yeah, I mean, I think there were a few, and our board is fantastic. They're super, super supportive, but we didn't really know that then. It was we literally hadn't even had a board meeting yet, right? That's kind of where we were. So unknown quantity.
Yeah.
But I think there are a few things. I think one big piece of it was having the other hard conversations first, right? So to roll up an MGA, there's a few things you need to do, right? Including you either need to break your contracts with your existing partners, your reinsurer, your fronting company, your claims administrator, all of these vendors that you've been working with and using, or you need to calculate up how much you need to pay them for the contracts to kind of ride out, right? And so those were potentially very unpleasant conversations, but we went to each of our partners up front. We're just like, here's the situation for us, and here's what we need to do. Will you work with us, and can you help us? And like amazingly, every single vendor basically said to us, this is usually a hot mess. And if you will make this easy on us, we will release you from the contracts without any issues. And we hope that, when the economy is better, when things come back around, when you've built your digital agency up really big and you want to build your own product again, that you'll come back to us. So that sort of says something for the relationship capital that we had built up before that, right? Because if you're an irritating person to work with and not truthful and not upfront and everything before that, they had no real incentive to work with us in this way. But it also is sort of facing down those demons first, so that when we went to the board, we could say, and we can do this with a relative minimum of, capital that we'll need to spend needlessly, et cetera. So I think getting some of the really, really hard conversations, not only that were inappropriate to have before we talked to the board, but to get some of those really, really hard conversations about what it would actually take to spin from one thing to the next out of the way first, rather than going to the board with, we think we need to do this, but we don't know what we need to do next. Like that's not really the right way to go to somebody. So yeah, those were hard conversations. They were really, really hard, because then your results and your problems then become somebody else's problems, because it shows up on their reporting and, their objectives and all of that. And so that sucked. But the people we worked with were class acts to begin with, and they were class acts through this process as well.
Yeah. And I think a lot of it has to do with what you just said there, and that of one, the planning, having the planning in place, having the questions, having the hard conversations. I think so often a lot of the reason why things kind of go off the rails is because people aren't willing to have the hard conversation.
Yes.
They're afraid of the outcome.
Yes.
And you have
goodness.
Right? Go ahead, jump on it.
I was going to say, I have like two rules of life, one of which is that it is always easier to have our hard conversations sooner rather than later. Always. I can't think of a time when that's not true, right? And that second of all, the outcome almost certainly hurts less than the uncertainty, even though we're wired to fear the outcome, right? So that fear is real, but you need to manage to the risk, not to the fear, right? And the outcome is going to be what it's going to be regardless of what's going on. So better to know it, because then you can manage it, right?
Yeah, and that's the thing, and like I'm literally thinking of like three people I need to text right now.
you and me both. I'm like, wait, I just said that. It sounded good.
I know. Well, right? I mean, we live it. We're always having those hard. There's just a list of hard conversations to have as owners of a company, but but yeah, no. So obviously having that hard conversation is one of the big things, and I think the transparency in it too is the other piece. Is I think the other thing that sometimes again derail these kind of conversations or hard conversations is the lack of transparency. And I think, like you said, like you got to put all your cards out on the table and say, like, look, you're just not going to make it, or this isn't going to work, and here's why, and here's an alternative. So that goes back to the planning, but putting your cards out on the table, right? Like, because now there's this collaboration that can happen between the two parties.
Yes. Yeah. Like bringing somebody alongside you is almost always a better option to my mind. And some of this may be style. Like my style is not that I'm going to like create these tricky deals where, I've got all these secret advantages and whatever. I'm not saying you don't keep the secret advantages to yourself to some degree, right? Like, there's such thing as trademark and trade secrets and all of that. But I often think that people who are trying to do that, that kind of thing they're not creating long-term value, because in order for relationships to work of any sort, whether they're business or something else, there has to be something in it for you and something in it for the person on the other side, right? And life is life is not only not a zero-sum game, but it's not a game that you play once, right?
Right.
So everybody you have ever met, you will see again, probably at the worst possible moments, you
Yeah.
know? So I have always found just being super open about what I want, what I need, and being really direct, which is something I learned a little bit later in life, is better than dancing around and being too afraid of the outcome.
Yeah. I know that Jay was a little bit more familiar or on the fundraising side, but I'm sure
Yeah.
you played a huge role in that as well.
Yep.
So one of the interests here is also in terms of fundraising. So I'm not sure where you're at currently with it, but in terms
Yeah.
of getting to that 7 million, which
Yeah.
sounds like a big figure, but in the insurtech world, it is minuscule,
Yeah.
but still a feat and still something to be proud of, and that
Yeah.
took a lot of work and energy. And so I'm interested
Yes.
in what was the starting point of that, of getting there, and how, what did that look like? What did that process look like?
Yeah, I mean, so this last round was a $4 million round. So we'd had about $3 million on board before that, which we raised through multiple pre-seed rounds, which is not atypical in the insurtech space, and also not atypical when you're raising around literally in the summer of 2020, which is what again, timing here questionable, right? If only you could always control that. But yeah, I mean, Jay definitely led it, but certainly investors want to see both co-founders, right? Always, every time, both how co-founders work together and what they bring to the team, and whether they're kind of hearing different people singing the same song, right? Because a lot, I mean, we all know that a lot of startups or partnerships fail because of co-founder conflict, right? And so they're looking to try to measure that. So yeah, so early on, a lot of it was convincing retired insurance executives and people who had an interest in the MGA space to write relatively small checks. You know, it could be $25,000, $50,000. Not that that's not a lot of money, but for a professional investor, it's not.
Mm-hmm.
And then some small fintech funds as we started to get a little bit larger, like Shore Ventures out of the West Coast, and Cameron Ventures in the middle of the country, and companies like funds like that invested in insurtech and fintech. And then this latest time, it was much larger seed stage funds. So our lead investor was MassMutual's Catalyst Fund, for example. But I mean, I think the process and the complexity in the organization is different based on what kind of investor you're talking to, and they all have like their thing, like whether what you're doing fits their thesis for what a successful company or successful founder looks like, or it's an area they're interested in or not. But at the end of the day, the most important thing is telling your story in a compelling way, right? Like, I mean, especially at this early stage, it is not about data. Like, everybody talks about traction, and yeah, of course, traction matters, but it's really not about the data, because it's not predictive of anything in the future at this point. It's about whether the investor sitting in front of you both has the money to spend on an investment and believes in you as a founder or as a founding team. Like, that is all that matters. And so telling your story positively and truthfully, but also with all the enthusiasm you can muster, that's the piece that matters more than anything else.
Yeah, I focus a lot on storytelling, and I
Yeah.
believe in that tremendously. Of course, the numbers and all of that comes up, but I think,
Of course.
to your point, in terms of the numbers and theory of the numbers of like your projections, that's just almost black and white, right? It's like, this is what the numbers are. This is what the statistics are. And
Yep.
you could create a story around them, but like you said, it's really your take on how you're gonna execute on that story.
Yeah, for sure. It's a bizarre mix at these early stages of the data you already have, which you should be presenting exactly as it is, right? But then your guess at the future, because that's all it is, right? Like, you can commit to the actions you're going to take, but you can't commit to the outcome because you don't know, right? So you got to do everything you can to de-risk that outcome. But yeah, I mean, it's early stage. Like, it's wild.
Do you remember your first pitch, your first
Oh,
exercise of
gosh,
that?
I do. I really, really do.
What was it like?
We were talking to a kind of large pre-seed and seed fund. And I just remember showing up in the room and being like, oh my gosh, I'm overdressed. First of all, I wasn't wearing a suit, but I was overdressed, right? I was also the only woman in the room, which turned out to be a very common experience after that. And I just sort of felt like, like somehow I was answering questions like technically correctly, but they weren't looking for like technical insurance know-how. Like I was somehow lost in, oh, it was bad. It was so bad. It was so bad. I'm cringing inside thinking about it. But also, if you don't put yourself out there and try it, then you don't get any better, right? Like in some ways, you got to kind of welcome the cringe, right?
What would you say in contrast to that, towards your closer to last one was like?
Yeah, so much smoother. Like Jay and I were sort of singing from the same hymnal, very well coordinated in terms of what parts he was going to talk about, what parts I was going to talk about when we got to, the partner. Um, Much punchier, shorter sentences, and also being sort of unwilling to take on questions that are really derailers, right? Like if you've got like somebody in the room who's asking these really specific, like, aren't you concerned about this failing or that failing? That's like a signal that somebody's not bought in. It's not actually a question to answer, right? Because any of these things could happen. I'm not saying that you shouldn't deal with major risks. Of course you should, but there's a difference between, hey, what are the major risks and how are you planning to overcome them or plan for them? And very, very detailed questions where somebody doesn't get the business or clearly doesn't believe, and they're trying to find a reason to say no, right? So I think we both got a lot smarter about that.
On those kind of questions, how did you move on from those? Politely, obviously.
Yeah. I mean, some of them just becomes like, so one thing I ended up saying a lot to more of the non-insurance investors, the insurance investors we talked to generally got it, but was just things like, yeah, I mean, that's a problem every insurance company faces or every insurance agency faces.
Right.
I mean, we got between us 40 years of insurance experience. Either we're going to be able to get over it or not. What do you want me to say?
It's interesting you bring up those derailer questions, because the reason why I jumped right to your most recent experience is that because what you were describing in the first one was one side of the table was asking all the questions while you were standing there pretty much answering.
Yes.
And when we think about pitching or sharing our story, if we're responding to questions, we're no longer sharing our story. We're derailed.
Right, exactly. Which doesn't mean that people shouldn't ask questions. Of course they should. But first of all, you're telling your story, you need to control the narrative, right? The second thing is that the questions go both ways, right? Because you're selling off a chunk of your business that you have busted your rear end for, and you are working to make these other people rich, right? And so what is it that they have to contribute? How is it that they treat founders if they're large enough to take a board seat? How is it that they see their role on the board? Can they give some references from founders of investments they've made where the investments have not gone well? Like those sorts of things are fair game. Do you actually have enough dry powder? Who are your LPs? Where are you getting your money from? And if you're afraid to ask those questions, you're not feeling the fact that it is your company and your livelihood and your work and your family that will suffer if you don't do this well, right? If you don't choose the right partners for yourself.
Yeah, I love that you brought that up in terms of, and I appreciate you sharing your honesty and transparency in terms of that process, because, so I mean, I had to do my own pitch. I went through the SBA fund funding process. And in that, I had to pitch my banker. I had to pitch the SBA, not specifically the SBA, but their intermediary that works there. But I remember actually the one that I was more nervous for, it wasn't even the SBA, and I have to give kudos to my accounting team in terms of this, it wasn't even the SBA or them, because I was pretty much ready at that point, although I still was nervous, was when I had to pitch to my accounting team. I remember that was... we had been modeling the projections for the company, what we're going to do, what we're going to be asking for and everything. And I had several meetings with them prior to this of them telling me, you got to trim this, you got to trim that. Where's the revenue? Where's the revenue? Trim this, trim that. Where's the revenue? And I'm keep fighting. I'm like, but I need that. And then I remember finally I had the pitch meeting to them of all right, we're going to meet with the SBA next week. Let's make sure everything's in line, make sure we're all on the same, like you said, singing the same story here. And that morning I was working with, at the time I had an executive assistant, and I was like, I need this, I need that. And she didn't get it to me. And I was like freaking out. And I was just like, I need this now. I need to be prepared for this. And she's just like, well, what is it that you need? And we got on a Zoom call and I don't know where this is. I don't know where that is. She's like, it's right there. It's right there, Michael. And I'm like, oh, there it is. I'm like, okay, thank you. Goodbye. Get out of here. And
it's like that haze of anxiety. You can't even see what's right in front of you, right?
Exactly. Yep.
Yeah.
I couldn't. And then finally, so then I remember I did the pitch to them, and they asked a bunch of questions, but I had my story, which they had prepped me on, and I was able to answer their questions, and they were like, "All right, you're good, you're ready to go." And I was like, "Oh, okay."
Oh, all right, that's all.
But those are the moments though that I think prepare you for those harder conversations, because I think back at that and it's like, I was worried about that. That was nothing.
It's so true, right? The other weird thing is that it's the more confident you can be and the less you care about convincing any particular person of what you're doing, like the more it's like an internalized set of this is the right way for the universe to be, the more likely you are to win. And like that whole sense of confidence is the first thing to go the moment you start feeling nervous, right?
Yeah. And I look back and I go, I remember, the sum that I asked for, and I look back and I'm like, and that was huge to me. And now I'm like, man, I should have asked for more. Like, and I had been advised to ask for more, and I thought I did because I did double my number. Mm-hmm. And I had been advised, in fact, there was a podcast guest that I had. It was a podcast, one of my first podcast guests. He had said that to me. Nice. He had done a lot of work out in Silicon Valley, and he had been part of some huge startups.
Yeah.
And I, part of my questioning, he had said to me, Michael, he goes, it's easier to ask for the big number up front than it is to have to go back for more. And that is true.
But there's some things that like somebody can tell you. Nobody can really tell anybody anything, right? Like, so there's some things that people can tell you and they may well be right, but until you feel them, you don't get them. Right. And then of course you turn around and tell the next person, you're like, oh, you should ask for more, right? And they're like, yeah, I am. And you're like, no, you don't get it. You should ask for 10 times more. And they're like, oh, I can't do that. Give them 6 months and they'll be saying the same thing to the next person, right? It's just the way of humanity. We all need to learn our own lessons, don't we?
And everybody has their threshold. And I think, as long as people are willing to grow and learn, they might take some of that advice and they might double it like I did, but I probably needed to quadruple it.
Yeah.
So that's really cool, and I'm really happy that you were able to share some of that with us. And I'm going to go even further back now, because I'd be remiss if I didn't bring this up before we conclude our episode here. You decided to jump on a big wooden sailboat and sail with a bunch of strangers. Now, being in the insurance world, most insurance professionals are very conservative, are very concerned about all the outcomes that could occur. But apparently for you, this was an adventure that you needed to seize, and I'm interested in that.
So I'm laughing a little bit because you're talking about something that happened almost 20 years ago, but I did almost the exact same thing last week, but in considerably warmer waters. So, anyway, very apropos. Yes. So I was a management consultant coming out of college. I'd worked for management consulting from like 30 hours a week while I was in school. And then a competitor hired us away. And the competitor was a Spanish company that was supposed to open a Boston office, their first US office, and their real estate deal fell through. So they asked me, do you want to go to Barcelona for a bit? I was like, yes, I do. Yes, I do. So I spent a year in Barcelona. I didn't end up coming back to Boston when the office opened. And then they said, do you want to move to London for a bit? And I said, yes, I do. Yes, I do. So I was in London in 2000, 2001, when, the big tech slump happened. And because it was Europe, not the US, the company I worked for was basically giving people optional sabbaticals because they couldn't just lay people off the way US companies can. And so as soon as they announced it, I shoved my colleagues out of the way to get to the partner's office. Was like, I want to take a sabbatical. And they were like, are you sure? Because I was one of the people that had been continuously staffed in that period of time. So I had skills they could sell versus some of the brand new people. And I said, yes. And they said, okay. And then I looked around to figure out what to do. And I decided to take a 3-month-long outward bound course. And it was a defining moment in my life, absolutely defining. So I don't think I understood. Like it was all, like in your head, like pine forests and campfires, right? Like in actuality, like like a month in Joshua Tree National Park, which was fantastic, but in February when it's cold, and it was actually January, then a month on a 26-foot long open wooden boat in Canadian waters in February, which again, let's mention how cold that is. And then a month backcountry skiing, which involved no helicopter. It involved walking up mountains in order to come down them, and camping up on the central Washington Canadian border. Really, really cold, with a group of 9 other adults I had never met before, and 2 instructors off in the middle of nowhere, physically stressed, emotionally stressed, mentally stressed. It was the hardest thing that I think I have ever done. I don't know, maybe starting a company comes close, but starting a company is not physically hard in that way. But it was an amazing experience. I was pretty shy growing up and after that, and a little bit maybe reticent and afraid to speak up or to stick out. And you kind of have to in a group like that, right? I mean, that's what Outward Bound encourages anyway. It's part of their educational program, really. But you have to in order to kind of survive in those conditions. And it was an absolutely amazingly difficult and amazing experience. And I came out of it a person changed for the better. I mean, I cannot say enough good things about Outward Bound.
Wow, that is incredible. I did not realize. I see it now. It says when I was 24. I didn't realize that. But, that you mentioned life-changing experience. And, a lot of people talk about life-changing experiences. And they're true. Like this isn't to discount them in any way.
No.
But in this one here, what I'm hearing is something that I talk about a lot in terms of dealing with stress. Is that like we look at stress and we go, okay, look, what next? What next?
Yeah.
What next?
Yeah.
Right? And we understand that if our life isn't in danger, then the reality is that this is just judgment that we feel, or this is insecurity that we feel.
Yeah.
And if we can bring ourselves to the present moment and be grateful for our health, for the people that love us, for our surroundings, then everything's okay.
Yep.
But in what you're speaking about here, your life was somewhat in danger.
Outward Bound would probably disagree, but it certainly felt that way.
Yeah, well, you signed a waiver, right? So
I signed many waivers, I believe.
Right.
Yes.
So they didn't disagree because you wouldn't be signing those waivers other than for their insurance policy, right? We know their insurance made them do it.
As the insurance professional, yeah.
Right. We know they made them do that, but they still made you sign a waiver, so they did know that your life could be in danger. Yes. And so that goes to, I'm relating it to right now, something that's off the top of my head is like, ice plunges and hormetic stress. In that, people talk about ice plunges for the healing effects, but really what it has to do with from the neurology standpoint is that you're making your body and your mind experience something that it doesn't like. And by being able to get yourself to experience that and then sitting through that pain, you are creating new neural pathways that are helping you overcome hard situations in other areas of your life.
Oh, you sound like a Huberman listener. Yeah, love this show.
I certainly am, and I've watched that clip a lot of times. And so to that...
Yeah, but it's so true. And it rings so true. And here's the funny connection between that and Outward Bound. So the reason Outward Bound was founded was because the founder realized that during, I want to say it was World War II, although it might have been World War I, that in the British Navy, when, boats exploded and it was man overboard situation, the sailors who survived were the older sailors, not the younger sailors. And he kind of couldn't figure out why that was. And then he realized that it was because older sailors had been exposed to more adversity over time. And just even though physically they shouldn't have been the ones to survive, they did. And so his positioning of Outward Bound was to create the moral equivalent to war, basically. To put people into very, very difficult situations, sort of as a crucible to bring them out the other side stronger and more able. 70 years later, I think that's still true. So it's exactly what you're saying, maybe without the full understanding of neurology at that point, right?
Yeah, and that's why I bring this up to you, and to that point of that's what you did to yourself at that
Yeah.
time. And I'm interested in now, like, seeing and understanding that experience, which you obviously do, and understanding the severity of that experience, how you've been
Yeah.
able to carry that over into the stresses, the hard conversations that we just talked about, the
Yeah.
boardroom, the different things
Yeah.
that you're doing today in your business, and
Yeah.
pivoting, right? Like, oh my goodness, that was scary.
It was scary. It was. Yeah. I mean, I think it's a couple of things. I think every hard experience you survive through leaves you stronger by and large, right? And so the more of those experiences you can face head on and just walk through, the more like wins you have, like pins on your belt or something, right? I don't know. And I think that helps with each future thing. I think too, the more things you go through like that, the more you're like, this was terrifying, but in the end, it was okay. Right. And that's almost always true. Certainly, there's situations in which that's not true. Right. But the vast majority of things that we get stressed out about in the modern world, regardless of what happens, a week from now, the sun is still going to come up. You're still going to be with your family. You're still going to like have a decent breakfast. I don't know, like all of those things are okay, and sort of grounding yourself in those. And then also adding sort of like, this is so trite, but like the self-care practices of getting enough sleep, making sure that you've got social connection. I work out every day, like that sort of stuff to kind of keep your biology level so that you're not in a position where you're overreacting to things or making bad decisions because you haven't set your neurology up so that you can make good decisions. Right.
And how do you tap into it yourself? Like you speaking to our listeners here about, because I think it's fair to say that everybody's experienced something traumatic, and if they're listening, have made it to the other side, and we're glad that you're here with us, right? And so how do we tap into what we learned from that experience? So for you, outbound and other things, outward bound, and other things, how do we tap into that in those moments of stress that we feel today in the decisions we make?
Yeah, so I actually do two things. One of the things that this is going to sound masochistic, but one of the things I do when I'm really stressing about something is I kind of say to myself, I'm going to tomorrow pretend that the worst possible outcome from this happened, and then just live with that as though I believe it happened. So like, I'm going to pretend, for example, the issue of going to the board with the pivot, I'm going to pretend that the board fired me and sued me. I'm going to wake up tomorrow morning as though I believe that's true. What am I going to do with my day, and how does it matter? Right. And you wake up the next morning and you kind of like put yourself in that headspace, and then you're like, I would start looking for a new job, or I'd think about my next company, or I'd call my last consulting client before I started this and mention to them that I'm back on the market looking for work. Like I wouldn't stay in my bed with like my blankets over my head and like ignore my family and never have anything happen that's nice again in the day. Right. Like it's just not reasonable. So sometimes imagining that worst case and then saying, how likely is that? I mean, almost never does anything go to the worst possible case. Right.
Right.
And then I think the other thing is literally just to be like, okay, I have been here before. I have felt this way before. Your stress expands to fit the amount of space you give it. What are the tools that I have at hand that can reduce the feeling of stress without actually fixing the situation? What makes me feel better? Eating a healthy meal tonight instead of the junk I feel like eating, right? Like going for a walk outside, like sitting in the sun for 5 minutes, like literally having like a mental list of those things and just like knocking off a few of them to see if you feel better, and then coming back to the issue rather than just doing that thing where you like
Looping.
Cycle on again and again, right?
Yeah, I love those methods, and it kind of brought me back to my childhood of one of the first close deaths that I experienced was a great aunt. I was fortunate that that's how distant it actually was from me. But I knew her very well. And she was actually in Canada. You brought up Canada a few times. So she was actually in Canada, in Quebec. And I remember going to her funeral. Now, I must have been maybe 5 or 6 years old.
Okay,
but I do remember this vividly. I don't remember the funeral. I don't remember any of that. I remember getting in the car to leave Canada after everything had been said and done. And I was so sad that she had died. It was my first time, I guess, experiencing death and dealing with it, right?
Grief is so hard, especially for a little kid, right?
And I remember seeing the adults laughing, talking and laughing, right? Because, we're leaving and it's a trip. And she was old. She was blind. She had diabetes. She was in her 90s. She lived a good life. She was wonderful. Don't Malia, just to put a shout out to her out there, right? So she had lived a wonderful life. And I remember seeing them laughing and I was like, how could they laugh? I will never laugh again. I'm a 5-year-old. I will never laugh again. You know,
Yeah.
why I bring this up is what you were just saying about experiencing the pain and the grief and allowing yourself to live in that moment and be like, okay, well, what's next? Is like, wait a second. That doesn't make sense. If we live in that moment of, I got fired, the board didn't accept me, the job failed, whatever it is, if we live in that moment and we say, I'll never work again, I'll never live again, well then.
But we do say that, right?
Right.
We do, right?
But it's not realistic.
No, right?
And that's the point, right? It's like, it's not realistic. I laughed again, as you can tell.
Yeah. You did. Well, and the point is, usually when we're worried about those things, we're not even in the moment, right? We're like stressed by something right now. And so we're like imagining these worst cases that are totally illogical most of the time, right? Like the things that in your head that when you're not controlling it, that you go to in the worst place, nobody will ever like me again. My family is going to look down on me. I'll never have friends again. I'll never wake up happy again in the morning. I'll never have another job. Like nobody's ever going to trust me again. You know, I mean, those are all like, they're ridiculous. You know?
my coach Merritt gave me this one that I love. Is like, it's none of your business what other people think of you. It's just none of your business, right? Yeah. And so when we remove judgment from our mind of like being fired and putting that negative connotation on it or losing something and all that other stuff, if we remove that judgment and we realize that like, look, people are going to look at us and support us and be like, hey, you got fired. What can I do to help you? What can I do to do this for you? Or, hey, you got fired. That sucks for you. You're a terrible you're a terrible worker. Okay, I can't control those two outcomes, but I know the person I want to gravitate towards.
Yeah. And I know the person I want to be for other people who come to me when they're in those situations, right? And if I know who I want to be and I wouldn't mind experiencing me and that's from the other side, then the same is true of many, many other people in the world, right? I'm not that special or that different, right? Yeah. So that's like the other thing. Remember, I'm like flip it around. Like, how would I think about somebody? Like if I sat on the board of a company and this kind of thing was going on, what would I think? I mean, I might be upset or angry, but more often I'd probably be like, gosh, that sucks. Like, is this the right decision or the wrong decision? Right. Which is not like, is that person a loser? Right. It's not. It's And
I think, and I'd love to get your feedback on this too. I think that as we learn this about ourselves, as we experience these moments and you tapping into this, as you were just mentioning, like you're able to tap into what's the worst outcome and how would I deal with it. You're able to tap into great experiences and also life engaging experiences. As we go through all of this, right? It's so funny. As I'm saying all of that, I kind of lost the track of my question. It's so funny.
And I was just right there with you. I was like, that's
I know.
Pleasure and pain all mixed together. I don't know. There's some
I was going somewhere with that. And that's one of the first times this doesn't happen to me very often because I usually write down a lot of my questions before I ask them. But that's one of the first times I actually lost complete train of thought. And I was just like, where are you going with this, Michael? But
it was gonna be a really brilliant question, wasn't it?
Well, what it had to do with is kind of just sharing with others how they can get through life. I don't know. I'm lost. I completely forgot what it was. I went blank. Sorry. This happens.
No. Okay. So let me take like a different direction then, because I was going to go someplace based on, I don't know what you were going to ask, but I was going to go somewhere with that, which is that the experience we talked about with Outward Bound was sort of earlier in life for me, right? I was 24. But starting and leaving Liberty to start a new company, and now ending up as CEO of it was my early 40s, right? And so one of the things that I have been like really pleasantly surprised by, like shocked by and surprised by, was how generative midlife is. I think there's like a way to sort of get stuck in your head, because I was stuck there, where you're sort of like, okay, I finished school. I did my like first starter job. Maybe I went back to grad school or I changed jobs. I got, a CPCU or whatever the right like professional certification is. I did all the right things. I'm moving up the ladder. And now what's next? There's nothing next, and then in your personal life, like, oh, I got married, I had a kid, we bought a house, all of that. Like, okay, now what? Now what? I did all the things I was supposed to do. And quitting my job at 40 and radically changing what I'm doing has been the most terrible. Making those changes was totally terrifying, but it has been such an opportunity for growth that I had not understood beforehand. And I'm so grateful for, regardless of which way all of this turns out. It's been amazing. So like, if you're listening and you're thinking about it, don't do anything rash or stupid, but like take the jump. Like it's going to be okay. And you're going to be a better person. If you're sitting there thinking, should I, shouldn't I? The answer is you should.
What is the thing about 40? I did the same thing at 40.
Midlife crisis, I think,
I know, but isn't buying a sports car better?
Given that I drive a 10-year-old Toyota Camry, I probably should have done that too before I left the big job,
Oh, yeah. So my car is a 19-year-old TSX.
There you go. We are styling,
And that was an interesting thing that I had to learn too as owning a company, is that I remember thinking about it and talking about it with my coach of like, I have to have this look. I have to have the new suit. I have to have the new car, and nobody's going to. And she was like, why do you need all of that? Right. And I'm interested into your mindset too, because you just mentioned, your 10-year-old car. So how do you work? How do you look at that in terms of the perception?
Yeah. Gosh, that's a hard one, because I have never really cared that much about stuff. Now I've had the advantage of having a pretty secure adulthood, because I always had good jobs. But I came from a middle class family. And so, like some of that stuff, like there was a long time in there when we didn't take vacations, and, we didn't buy a lot of fancy new stuff and all of that. But I think too, I am inordinately grateful to my husband, right, who also has a full-time job that's stable and steady. And so our household has been fine, right? But I think some of the things I worried about, like my daughter will go without, were just silly. They weren't the things anyone needs, and especially not the things a kid needs, right? Like you find a way to make the things you need work, and the rest of it, who cares? Like I remember, all right, now I'm going to tell you a story that's not super flattering, but Liberty Mutual has private jets. And I remember getting off a trip on a private jet, and they would pull up, like whoever was on the jet, they would have your keys and your car basically, and they would pull the cars up on the tarmac and open the trunk and leave them there, which sounds so like cringe, as my daughter would say right now, but that's what they would do. And I remember, and I had an even older Toyota Camry then, because like I just have never, like, it's a depreciating asset, people. It doesn't make any sense unless you actually enjoy cars, which I don't. As long as they work, I enjoy them, And I remember one of my colleagues getting off the plane and going, "Oh my God, who drives that piece of crap?" And it was like one of the only 2 times in my life I've actually had to come back then instead of at 3 a.m. And I turned to him and it was like, "Oh, me." But the good thing is I spend the company's money the same way I spend my own money. And everybody laughed. I was like, the only time in my life. But I think some of it is that we think we need more than we do to be happy and content, and that is not true. We need enough, right? We need healthy food and a safe place to live, and education for our children, and healthcare and all of that. But we don't need the fancy clothes and the fancy vacations and the fancy cars and all of that, We don't.
I love that story too, and that like owning it is part of the whole journey that we're talking about here in terms of entrepreneurship. Is really just owning our truth and who we are, and that took me time to learn. And I think the other part to that too is that we're on the rise too, and that where we are right now doesn't dictate where we're going. And I think it goes back to your pitch conversation in that the car, the perception that somebody might have of you based off of how you're dressed or what you're wearing, jewelry or the car that you drive. Those are the black and white numbers that are just there. We don't have much control over those, but in terms of me being a business owner, you being a business owner, and leading a team, that has to do with our story. That has to do with our drive. That has to do with, you had mentioned before, the enthusiasm that we have to lift our team. And when we're thinking about an investor, when we're thinking about a client, that's what they care about. We don't know that when we're starting out. I'm a car guy, so for me the car is important.
It's all right. Everybody has their thing, right?
But we don't know that from the beginning. But I've learned that, we're celebrating our 2nd year in business at Den10. And I've learned that, thank you. I've learned that people that speak with me about our team, about me, about the business and everything, they care more about oh yeah, no, Michael, you have that energy, you have that drive. And I'm like, you don't care about the old car over there? I didn't even know you drove that.
Yeah. Yeah. I mean, there is like a base level of you need to sort of fit in, right? Like if you're living in like a grass hut and I don't know, like you're unclean because you don't have a shower or whatever, like that's a
That's the
different
one,
thing.
right?
That's not where most of us are playing, right? Like it is just not. And so yeah, I mean it's who you are and how you bring yourself to work and the actions you choose to take and how you treat people that matter so much more for your business outcomes
That's right.
than all the things about who's thinking what about me. And worrying about what other people think is taking energy that you could be using someplace else, whether it's your family, or your business, or even just on your own relaxation or hobbies.
Yeah.
It's a waste of life, total
Yeah.
waste of life.
I love that. This has been really a lot of fun, and I want to just go into your final thing, which is your mantra here, which is really, really cool. Well, first of all, before I even get into your mantra, actually, one of the things that I do like to bring up, and you did actually share with me, because some people are so modest about what they do in terms of philanthropy, but I think that everybody's kind of philanthropic in their own way. They just don't realize how much they give to others. And sometimes they're modest in it. And not that you aren't modest in it, but you were able to share a little bit more than I'm used to being able to find on someone. And for you, it has to do with food insecurity and and growing up in a food insecure household. I've actually I've learned what food insecurity is, and I've had the opportunity to work with somebody who works very deep into the world of food insecurity. I've actually been a part of some fundraisers for food insecurity and learned a tremendous amount. But not everybody knows or understands what it is. And so if you could just share in your words what that is and how people can affect change there.
Yep. So it wasn't me that grew up food insecure. I don't know if I wrote that in there. You did. It was my mom.
Your mother, yes. Your mother grew up.
Yeah, who grew up in sort of coal mining country, and her father got paid in chits to the company store instead of cash, right? Which is abusive and illegal even back then, but it was what happened, right? And so food insecurity affects something like 1 in 5 or 1 in 6 children in the United States. And what it means is that a family is not sure where their next meal is going to come from. So it's not just whether there is or isn't food and whether the quality of the food is or isn't healthful. It's also the stress that comes from parents not knowing if they can feed their children, and the stress of children not knowing that they can count on, being fed on a regular basis, which is like how to strip away a kid's sense of security. And to me, it is so wrong that those should be the numbers in a country this rich. It is so wrong. And so that is a cause that is very, very meaningful to me, and that I have always donated to the full extent of my financial capability. And so I have to admit, I'm that person that says no to everybody else's fundraisers, because every dollar I goes to like feeding hungry kids. Like, it's just like, how can that be a thing? You know, like, how can that be a thing?
I think there's something to be said about that, though, having those boundaries on where we donate, because there are many causes, and I look at it the same way. You know, you have to focus. You can give as much as you can to everybody, right? When you can, but there typically is a focus on places that are near and dear to our hearts, and that's a good thing, because there's so many things out there that affect so many different individuals, and so they need their champions. They need people like you that says, you know what, the bulk of my extra money is going to go to food insecurity and the different food banks and making donations there. I know of one place in our area, in the Hudson Valley area, that I don't know if they opened yet or they're opening. I forgot which one it is, but what they've actually created for food insecure families is, as you know, food insecure families will go to a food bank or some kind of donation center. And what typically happens, which is still, they're still grateful for this, but you can understand what's not so great about this is that the food is bagged and you're literally handed a bag and you walk out with whatever they give you.
And it may be right or wrong for your family. It may match allergies or not. It may meet sort of your cultural foodways or not, right? All of these things.
And also, let's go to the psychological standpoint of how do you feel about that, right? How
dehumanizing is that in some ways, right?
Right. And so there's
really what you're given. That's what that is.
Right. And and so I forget the organization. I just learned about this recently, but right here in the Hudson Valley, opened up actually a store a food bank store
Yeah.
to where the family can actually come in with a shopping cart and actually pick off the shelf, the food that they want for their family.
Amazing.
And
Yeah.
I thought that was so great, like a nice progressive
Yeah.
way of doing this now. And I hope that
Yeah.
carries on.
Yeah, no, similarly here, the Greater Boston Food Bank is like the big regional food bank in our area. They do really, really good work. Very professionally well-run organization. But one of the things they've done is that you can imagine what most of the food at a food bank looks like. Like it's shelf-stable, non-perishable foods. And so they've partnered with a lot of farmers out in Western Massachusetts to bring fresh produce in and to change sort of the logistics of how they handle the food so that they can make fresh vegetables and fresh fruits available as well, which we all know is great for our health, but also like I find that amazing. Like it's just a way of the community supporting people in need, but also supporting the farmers. There's just something about that to me, it's just amazing. They do really good work.
That's really nice. Yeah. And so I just want to give a shout out to all of those food banks. There's certainly some, wherever you are listening, there's definitely a food bank. There's definitely a place in your area that you could donate to, donate food, donate clothes, donate something to for these families. And I also want to just kind of remove this idea of what food insecure looks like. Food insecurity, and please chime in, jump right on it, because this is really for you. But they are working class citizens too. These are people that have a 9-to-5, that are working, that maybe even have an apartment, and are living on their own and are trying to live on their own means. But they, as you just stated earlier, can't afford to put food on the table on a regular basis.
Yeah, and inflation has made that a whole lot worse, right?
Yeah, so really challenging.
All prices have gone up. Yeah, for sure.
Is there a food bank in your local region that you'd like to shout out?
Yeah, it's the Greater Boston Food Bank.
Okay,
for sure.
cool.
They're amazing. Yeah.
So the Greater Boston Food Bank. All right. And so finally, with that, of course, I like to just kind of get an idea of your mantra, what it means to you, and how you live into it. And for you, it is love and bravery. That's how I want to face the world.
Yeah. Yeah. So this to me is something I say in my head all the time, because what I want is to approach every person around me, not with niceness, because nice is sort of fake behavior in a certain way, but with all the kindness I can find, like seeing in even the people who I find difficult, their human dignity and that they're worthy of respect because they're humans and no other reason. But also to say to them what I need to say to them as kindly as possible. So that's easy when everything's great and you're delivering good news and whatever, but it's hard when you're sitting with people that you need to say a truth to that either they don't want to hear, or that you don't want to share, right? And so living on that edge of coming from the very best place, like a place of truth and of light and of care, but also saying the things that need to be said, is sort of how I aspire to live in the world. I don't always meet that, but that's where I am. That's where I'm aiming.
I love that. And also, and the bravery in that too, that statement there, I think is also big in all of it. That's awesome. That's really, really great. I really appreciate that. Of course, this will all be in the show notes, but I would love, you sound like somebody that can mentor many, are willing to share advice and thoughts and listen to. So with that being said, how can people find you, reach out to you, and connect with you?
Yeah, easiest way is just to find me on LinkedIn. My contact information's there. I am up to date on my LinkedIn messages. So yeah, that's probably the easiest place.
Awesome. Yep. So they can find you there on LinkedIn. And then, of course, Surround. I want to just make sure, surroundinsurance.com. And you're in 30 states. That's pretty cool.
We are. So please come talk to us if you need insurance, particularly if you're sort of tech savvy, younger adult. We do non-owner auto, subscription cars, regular cars, renters, condo, home, pet, whatever you need, we'll help you.
Awesome.
And if we can't, we'll find someone who can.
Very cool. Awesome. Well, thank you so much for coming on today. This has been a really great conversation. It was very interesting to connect on the insurance side first. Typically, I like to go into the backstory, but it's so nice on how it naturally flowed. And I hope that our listeners, that you out there listening right now, were able to learn a little something and get entertained today. Thanks so much for coming on.
Thank you.
Thank you for listening to The Michael Esposito Show. For show notes, video clips, and more episodes, go to michaelespositoinc.com/podcast. Thank you again to our sponsor, Den 10 Insurance Services, helping businesses get the right insurance for all their insurance needs. Visit den10.io to get a quote. That's DENTEN.io. And remember, when you buy an insurance policy from Den 10, you're giving back on a global scale. This episode was produced by Uncle Mike at the iHeart Studios in Poughkeepsie. Special thanks to Lara Rodrian for the opportunity and my team at Michael Esposito Inc.